Hey everyone, in this video I'm going to present you my top 10 growth stocks to buy now in April. Now I've been doing this video every month for 2024 and I've been including an update as to how my stocks have been performing. I'll do that again in this video. I'll update you on how my 10 best growth stocks have performed so far year to date and compare that with the S&P 500 index and an equal weighted index. So without further ado, let's take a look at what these 10 growth stocks are that you could buy now in April.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, here's my list of top 10 growth stocks to buy now in April. It includes Nvidia, Fortinet, Amazon, Snap, Fiverr, PayPal, Salesforce, Uber, Alphabet, and Chewy. Of course, if you've been following my channel, you've known that Chewy is my most recent update. I added Chewy to this list last month. Now, of these 10 stocks, the best performer has been Nvidia, returning 82% so far year to date, and the worst performer has been Snap at 32.19%. Now, you might say, wait a minute, Chewy has performed worse than Snap at 32.67%, and you would be right. However, I didn't add Chewy to my list of top 10 stocks to buy until last month, and for the 1 month alone, Chewy has performed a little bit better than that, returning negative 11.76%, not the full over 32% downside for the year. I've only added it for 1 month, so I've only actually performed negative 11.76% for 1 month, not the full year for Chewy in the top 10 growth stocks to buy. Now, additionally, you might say, well, Nvidia stock is really expensive. It's already up 82% year to date. I would agree with you in that Nvidia stock has performed really well so far in 2024, but that's been justified because of the rise in earnings, in profits, cash flow, and revenue. It hasn't been Nvidia increasing in price just based on hype. This has been justified with profits and cash flow. I'm skeptical of companies that have an increase in stock price just based on hype, but that hasn't been the case with Nvidia. Nvidia has had an absolute surge in revenue and profits and cash flow, which has justified this higher valuation because you're getting so much more in return for Nvidia stock. In fact, if we look at the forward price to earnings ratios for all of these stocks that I'm mentioning here in this video, you'll notice that the valuations are not that expensive. In fact, Nvidia is trading at a forward price to earnings of $29.99. Not expensive at all considering the lucrative prospects you're getting with Nvidia stock. The most expensive stock on the list is Fortinet at a forward PE of 35, and the cheapest stock is Fiverr International at a forward PE of just 9, which I think is a bargain valuation for a growth stock like Fiverr. Of course, Fiverr is facing near-term risks with slower growth, and of course, it's an Israel-based business, and the war in that region is not helpful for Fiverr, and in fact, it's causing devastation for all of those in that area. And so Fiverr has that double downside for its business. But at a forward PE of 9, I think that's more than incorporated in its valuation. And I think investors are still getting a good deal with Fiverr International at current valuations. Now, I won't get into detail on each of these stocks as to why I like them as a buy. This is a top 10 growth stocks video, and if you want deeper analysis on any of these videos, I've got whole playlists on all of these on my channel, so feel free to dig deeper, do further due diligence before going into any of these 10 growth stocks in this video. I'm just going to highlight that their valuations are attractive when measured by a forward price to earnings ratio. Now, the stock that I've taken off my list last month was Zoom Video Communication. It was on my list of top 10 growth stocks all the way up until the end of February, and then I removed it from the list. Up until that date, the company had delivered negative 1.64% return year to date. So far, I removed Zoom and I replaced it with Chewy in my list of top 10 growth stocks to buy. Now, let's compare how my list has performed against the S&P 500 to determine if I have been outperforming or underperforming the index versus my 10 growth stocks. Now you could see the total return index, the S&P 500, has delivered 10.39% return year to date, which has been a really good year for the S&P 500. And the equal weighted index has returned 7.78%. The difference between these two is that the equal weight index gives each stock an equal weight return in the index versus the S&P 500, which is a market weight index, giving the bigger stocks a larger percentage in the total return. So it favors the index when large cap stocks are outperforming, which is what's happened so far in 2024. That's why you see the total return index is higher than the equal weight index, because large cap has outperformed small cap in 2024. But my returns, I'm looking at it on an equal weighted percentage basis, so it's more informative to compare with the equal weight index. Still, I included the S&P 500 as a more comprehensive comparison. You can compare my 10 growth stocks versus both the total return and the equal weighted return. So let's look at those returns and those comparisons right now. All right, so if you look at my average for the 10 stocks so far as of the end of March, I have returned 9.65% with this list of top 10 growth stocks. Now, if you compare that with the S&P 500, it's trailing a little bit behind the 10.39% return. But if you compare it with the equal weight, which is what I've done here with my stocks, I've just given them an equal weight and just calculated an average. I didn't give a greater weight to NVIDIA, which is the largest cap tech stock, and I've added 82.29% return from NVIDIA. So the equal weight index has delivered 7.78%. So if you compare my performance with the equal weight index, I've outperformed that equal weight index by 24%. A solid outperformance, to be sure. I would be happy with that return for the rest of the year. If I continue to outperform the equal weight index for 2024 by over 20%, I would be thrilled with that performance. Now, if you just look at up versus down, overall, 1, 2, 3, 4 of my stock picks in these growth stocks have been down, and 1, 2, 3, 4, 5, 6, 7 have been up. Now, you'll see 11 returns here because I've included the return from Zoom Video Communications from January to the end of February, and then I've included Chewy from the time I added Chewy, which is from the end of February or the beginning of March until the end of March. So that's why you have 11 returns here for 10 stock picks, because I removed Zoom and then I added Chewy, but still I had Zoom in the first 2 months, so I need to include that return in this overall return. And then I had Chewy for the last month, so I included that last 1 month performance in this return index. So overall, a good return, more up versus down, and overall 9.65% return versus the equal weight index of 7.78%. I would be thrilled if this kind of outperformance continues, but I'm not expecting this kind of outperformance for the very long term. I don't think I'm going to be that much better than the equal weight index for the very long term. I don't think my skill in investment management or stock picking is that much better than the equal weight index. If anything, I would only expect to be slightly better than the equal weight index at the very best. I don't think I'm going to outperform by this much, but anytime there's this kind of outperformance, I'm certainly happy with that, and I will take it whenever it happens. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.